Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Hey folks, the name of today's show, it's going to be called Interest sucks. Interest sucks. And you'll get the drift of it as we progress through here. So there was some breaking news today. I don't think you guys saw yet, and it's from the Federal Reserve. So we know the Federal Reserve is going to be replaced, or some pieces of the puzzle are going to get replaced next year, and that's coming to the forefront. And then we're going to talk about 50-year mortgages. Is it a good thing? I'm probably going to have a lot of people ticked off at me at the end of this video. So let me start posting your comments down below, and you guys know how it is. If you're a realtor, put a house. If you're a mortgage broker, put a $sign. And if you're a customer, just give us a thumbs up and let me know kind of who we're talking with today. So there was some breaking news out. We'll get to the 50-year mortgage here in a second. There was some breaking news I want you guys to see. If you go over to here, Atlanta Fed President Bostic, he's leaving his position. Now, he wasn't supposed to leave for like a year and a half. And this is going to be huge news. And the reason why is he just announced it today. He's going to retire early. Well, we know the federal chairman Powell, his term's up in May. Now we have Bostic, who's going to early retire. So now what's going to happen is, well, the goal here today is to help you guys explain what's going on with here. Now, what's going to happen with these things? So that's what we're going to talk about in today's video, because there's a couple different outcomes here. So if you're, like I said, if you're a broker, let me know what you're thinking down there. Where rate's going to go from here? This is going to be good news, bad news. Let's get to it so you guys can understand what we're going to look at. So here's what we did. I did some analysis, and I'll post these on my blogs on our website. Here's what's happening behind the scenes right now. Federal Reserve Chairman Powell, his term is up in May 15th, 2026. It's 6 months from now. He's going to be replaced. We know that, and he's going to be replaced by somebody Trump wants. And let's think of it this way. President Trump, he made his fortune doing what? Real estate. Okay, so he really wants interest rates to come down for real estate, houses, buildings, everything else. So his agenda is going to be lowering rates. So he gets to actually replace these people. So we just had Chairman Powell. His term's up, and then we're going to go down through here, and we're going to see the other member. His name is Bostic. He's on the Federal Reserve Board. But here's the outcomes of some of these things. Here's what I'm looking at. What's this probably going to do to rates? It's probably going to drive down rates. What's going to happen with home prices? Well, if rates come down and makes things a little more affordable, people might say, okay, now it's time to jump in. So this will not have a detrimental effect on home prices. It might actually bring them back up. Now, I don't want that either. I'd like houses to stay right where they are because I have a huge appreciation on my home. And if it keeps up this point, you're never going to be able to find a house. But what could happen if inflation spikes up and everything else? Well, even with an aggressive Fed, they're probably going to be more aggressive on rates. So think of it this way. Most likely what we're going to see is rates in the future coming down on the Fed side. Now, what's that's going to do to mortgage rates? We have to focus in on the bond market for that stuff. So now let's start talking about the other piece of the puzzle. So I don't know what happened and where people were getting my numbers, my phone information, but I got a call from News Nation. I got a text actually from them the other day and said, hey, can you go do our show that we have an opening at 1 o'clock for you to do it live? We want you to talk about this 50-year mortgage thing that came up. Right after that, AOL. And then last night, I had a phone call from NBC. Brian, he did the production yesterday, and I actually saw it live. It was pretty cool. He quoted me in there because we had about an hour conversation on it. But everybody's asking me, Dan, what's going on with this 50-year mortgage thing? So when I first started talking about it, I'm like, okay, what would you think? Okay, the first thing I would think, let me know what your first comment is. It's going to be different if you're a homeowner, a realtor, or a broker. And here's what I mean. On my side of the fence, I'm like, okay, this will help a little bit. It'll maybe save some people some money. But the first question I have as a lender, what rate's this going to be? We don't even have this product available. There's a 40-year loan term available. Those are for modifications. It was approved in the Dodd-Frank bill back. This is I got to get off of here. Sorry. I got to get off of it was part of the Dodd-Frank bill that was put in place. And I think it was 2010. They came in and said, you can extend a loan term to 40 years if it's a modification or you're trying to do some kind of bailout. So this would have to basically nullify the Dodd-Frank bill. It would have to recreate a whole nother instrument on Wall Street. So Could it be done? I guess it could be done, but is it a good thing? That was the question I was asked. And I'm like, at first, I'm like, I don't know. The rate's going to be high. You're going to pay a ton of money over time. Today, I did a bunch of research because if you had News Nation calling, you have NBC calling you. Now you're like, okay, who's going to call me next? Maybe Rick Santelli over at CNBC. You know how I feel about over there. But so I figured I'd dive into this. So I need participation, folks. So I know there's a bunch of you here today. So let me know what you're thinking. Let's just jump into a few people here that joined us. So I know the times I come on are a little bit staggering, but thanks for coming on. We got Palumbo. Thank you, sir. Plumbon. I'm sorry, Plumbon. Don't know if it's a sir or not. So my apologies. Thank you. Thank you so much for joining me today. What's the next one we got? Oh, you're here again. Thank you. Thank you, Sedley or Seridley. So thanks for joining me today. So let's kind of dive down this outcome. Okay, here's that part of it. Here's what I want you to look at. Now, when you start looking at the numbers, if I'm a homeowner or looking to buy, the first thing I'm thinking is this could help me out tremendously. Okay, because when I bought my first house eons ago, I took an adjustable rate, any way I can get my lowest payment possible, because the biggest thing I was looking at that time, I was always told, don't try to time the market, focus on time in the market. And my parents were first generation here from Italy. Their whole goal, my dad built the house we lived in. So that the whole goal was home ownership. We always wanted to have homes. I hope that's still the American dream. But so at this point, could this help actually new homeowners? You know, I did some research and you might be surprised. So thanks, Vice, Jay Vice. Thanks for joining me today. Shredley, let's run some of these numbers. Now, here's what I want you guys to understand. Do I like this? No. Do I think you're going to pay a ton of interest? Yes. But also the number looks huge. I get it. Let's go down through here. The interest you would pay on this is, gazillions more than you would on a 50-year. I get it. But let's look at it this way. If you bought a car, and I'll do some numbers up here. You buy a car and you pay interest on that, and the car lasts you 5, 6, 7 years. How old's your car? Let me know down there. I got a car that's actually outside. It's 2015. It's paid off. But most people would probably buy a car every 5 years, and then you're refinancing and finance it and do those things. So at the end of, let's say when you stop driving at 80, how much interest did you pay on that car? What's the car's worth? Nothing. And you probably paid $100,000 in interest over the term. So yeah, when you look at a house payment and then you look at how much you paid over time, the number's staggering. But also look at credit cards. A lot of credit card rates that you check your interest rate on your credit card. It's probably 25 to 28%. If you run a balance of $5,000 all the time, just all the time, even if you spend $3,000 and pay it down to $5,000 or whatever, at that rate, you would pay over $100,000 in a 30-year period. $100,000 on just, think of it, basically interest. Okay, and you got stuff, but you didn't get a house. Maybe that's one way we should look at it. I still want your advice down below. I don't know the answer to this, but I ran this through AI, a whole bunch of different scenarios. I could show you all the analytics behind it, and I didn't want to show you guys this, but I didn't want to show you the data because it gets way confusing. But when you run the analysis, here's what it came up with, and I didn't make this up. I'm not going to show you. I went to Chat GPT and just put it in. Do it yourself. I went and said, okay, over a 3-year time period, okay, you got to remember when you're paying rent, your rent's going to go up every month, right? Okay, not every month, but every year, a little bit. You're going to pay, that insurance and things like that. But what are you getting? You're getting a place to stay. At the end of this, let's say you rented forever. Are you better off than what you were to buy the house? Because with the house, you have an asset. Even though you're paying interest on it, you are paying some principal against it. And also, which you might not think of, is that appreciation that you normally get. Now, hopefully you're not going to get a 20% appreciation over the next 2 years, like some saw back in the early 2020s, but you're not going to have a complete crash in the market. And hopefully with 50-year products, maybe a more aggressive Fed, home prices aren't going to crash. Okay, it might be, Austin. There's some streets in Austin that aren't doing good, or some in Florida and things like that. But overall, we don't have a crash in the market, because you got to look at it. Even as Zillow, Redfin, all these companies come in and say, okay, the housing market's up 1% a year. And you're like, okay, well, Austin's down 10. Well, that means another market's up 11. You get it? Because if your overall, the whole nation is up, well, yeah, you got some markets down, but you have some markets up above that. Think of it that way sometimes. Sometimes think of the glass as half full, maybe instead of half empty. So let's get to some more of your questions. Oh, we do have a broker here. Let's see. I'm going to go through these. I don't have any moderators, so let me try to do the best I can on here. What would happen if the Fed does a massive cut, like 2 points? This could, in my opinion, do somewhat of a market reset, maybe getting the 30-year rate down to the 4s. Perhaps this could be a good thing. Could they? Yeah, they could. And that's what, I think it was Trump, it was a couple months ago. He's like, we need 5 rate cuts. We need the federal funds rate down to like 1 or something. I'm not for that, because people are going to go back out there in the free money again and spend. Prices are going to go up. Folks, again, I don't want you to pay interest. That's what the header of the show was. Avoid interest. If you can pay off a house or pay it for cash, buy a house for cash. Buy whatever you can for cash. But what do you finance? Do you finance stuff on a credit card that, okay, I can buy, some pop and a computer and things like that? At the end of it all, that's not worth anything. My car, okay, I got a real nice car back in Chicago. I'm in Florida this week, freezing my butt off. And in 20 years, it'll be nothing. Okay, but you paid a lot of money for it. But I got a house, 2 houses, and you pay on those. And sometimes the payments you struggle. But, you do get some tax benefits sometimes. And then hopefully over time you get appreciation. And then even if, let's say your house doesn't appreciate a penny, and you bought a house over 20 years, most likely you're going to have a profit. What other asset would you do that? Now, again, I'm not FOMOing homes. I don't think everybody should own a home, but I just want the kind of the logic behind this. When you see some of these numbers, when you look at buying a house, it's like, it's overwhelming. But let's keep going down through here real quick. I'll get to the questions in a second. Here's when it got a little interesting. It said at the 5-year mark, break even to slightly edge for owning after refinance. So what I put in here said, okay, we bought the house, and in 5 years, these people will have the opportunity to refinance at a rate at 5.99. I'm like, okay, you're not going to have a 7% rate forever. I mean, these are the highest rates we've had in a couple decades. So, you're going to be able to refinance. So now it's saying, okay, maybe in 5 years it's breaking even. Again, it's time in the market, okay, especially with an asset that's appreciating. Okay, if you're a realtor out here, kind of chime in if you would. 10 years, owning clearly ahead of renting by $30,000 to $40,000 on just an average home, on average appreciation. So then when you get to 20 years later, even if you got a 50-year term, like if you're a first-time home buyer, maybe look at it. If it's not going to come to fruition, but if it did, it's like, okay, it's $200 cheaper than I would have been paying. When I bought my first house, I was making $18,000 a year. Yeah. And I was like, I just need the lowest payment possible. I had cash. Made some money by just working my butt off, part-time jobs for my dad and things like that. So I had some cash to put down on the house. Like, okay, here's this. And I just wanted a house. And my payment was almost equal to, it was a little bit more than my rent. But I'm like, okay, now I got a house. And then 20 years later, I got a house, and I got tons of equity in it. And yeah, I paid, if I look back and look at the interest I paid over time, I'd be like, it's ridiculous. But again, how you look at this, especially if you're a loan officer or realtor, it's time in the market. It's like if you're a stockbroker or whatever, you got, even if you don't have any money, my whole goal on this channel is to help people, understand stocks, bonds, just investments in general, help you understand the things that the schools didn't teach you. Okay, so please ask some questions up here. I'd love to answer those and share the videos if you would. I don't know why we're getting exposure on all the national channels for the 50-year mortgage, but let your clients reach out. I mean, I just posted a video, and there'll be this whole interview coming out on Saturday. It's just going to be this. Show your clients this, and this is my raw data going through and really telling you what I thought about the 50-year term. And when I said that, I'm like, it's not going to come to be, but if it did. If I can't buy on a 30-year term, here's my comment I made. If I couldn't buy on a 30-year term, I wouldn't buy. Then I think back, and I had time to think about it overnight. And I'm like, you know what? I bought my first house at 23 years old. when I was 23 years old, I didn't give a shit. My house payment was $1,000 and I was making 18 grand. So I was hustling. And I was able to get into home ownership, and that's what's it's about. And my goal here is to just help you understand all this stuff. So let's get back to the questions. My apologies for going off on a tangent. So could that happen? It could, but is it most likely going to happen? I don't think so. So sorry about that. You don't get taxed on cars like how you are taxed on unrealized gains in real estate with property terms. I get it. I'm not here proposing one or the other. I just, my initial reaction was there's pros and cons on both. Okay, you can also say, well, when you buy a house, you have all these other expenses. You're going to have a cable bill. I haven't rented in, I can't tell you how long, since I was 23 and I'm 60. So I've been rented for years. I don't know what's included in your bills, but I see a lot of these YouTube videos where guys will come in and they're interviewing somebody and they're like, oh my God, everything is so much more expensive. They didn't realize they're now going to have a water bill, a garbage bill, a cable bill, these things you'd never even thought of. And that's $1,000 a month, maybe. So again, am I FOMO for everybody buying houses? Absolutely not. That's why I come out here and do this. But what I wanted to explain is, over time, would it make sense? I don't know the answer. I really don't know where a rate's going to go. Can you at some point refinance at 2%? Fantastic. But don't just maybe I prematurely went into it and said, okay, no, it doesn't make sense automatically. But most European countries, I think people put on some of these posts, you can get loans for 5 years. Well, it's amortized. You don't have to pay the house off in 5 years. But a 30-year term is I don't think it's anywhere else out in the world. It's a long term too. You look at the numbers after you pay it back and you sit there and you say, oh my God, I spent 3 times the amount on that house versus what it's worth. But that's the part of financing. So that's what I was trying to say. Look at your credit cards. How much interest? Just look at how much interest you paid on what your balance was. Times it by 12. That's how much interest you paid on a year, and what's your balance based off of. Sometimes it could be staggering. Look at that car payment. Again, at the end of 10 years, that car's not worth anything, and you just spent. You financed 40 grand. You paid back 60. So you've spent 60 grand over 10 years, and at the end of it, it's worth a zero. So those are things just to think about. Again, I'm not here to tell you what to do. I'm just here to help educate you, or at least help you think it through. Okay, so let's see what we got here. In New York, NC charges yearly property taxes on automobiles. Actually, yeah, West Virginia does too. I just paid my mom's. Actually, no, we sold the car, but I had to pay every year I had to pay her asset tax or something like that. So, some of these, don't complain. You could live in New York or New Jersey. I live I'm sorry, in Chicago or New Jersey, and New York too. Our taxes here are crazy high. And I know I elect to live here, so I'll complain about it, but it's bad. But a lot of the states out there, your taxes are pretty darn low. I see them a lot. So let's go to the next question. We got 50-year mortgage will cause home prices to. That's exactly what I said. So the interview on there, especially Nicole over at News Nation, even Brian over at NBC, they're like, so what do you think on this? And I said, here's my concern too. And I said this, I think, to NBC. I said, if you bring down the payments, $200-300, what's going to happen to home prices? He said, going to go up. I think even Nicole said saying they're going to go up. I said, exactly. So right now we're in a situation where home price, we know they're way up there, and it's like any other true asset. What's gold worth today versus what it was worth 30 years ago? I don't know if that quarter. I think we're way up. But that's what I mean. Just because you have volatility in the market and everybody goes back to that 2008, it's going to be worse than 2008. I don't know if I haven't even started. I haven't even looked at those guys lately. Let me know if those guys are still out there doing. The world's going to end. Now they went 23 to 2024, 2025. Now we're going to go into 2026, and they're going to say, well, we had a 3-year delay for the whatever I was going to say. So let's get to the next one. What do we got here? 50 is great. Prices will rise. Exactly. That's it. And then that was my comment. I said, do we really want this program? But then the next question on the other side of the fence, you might have somebody saying, okay, home prices need to go up or whatever. So I don't think we're going to get any aggressive payment scenarios without home prices going up. I mean, look at what home prices have done over the last 2-3 years. Now, if you just look at a national level, you can pinpoint any city you want and say, okay, here's what happened. But again, look at it nationally. Because again, if one was down 20%, another one was up 21%. If you had a net gain throughout the last 2-3 years. Okay, so if you look at things like that in the housing market, maybe it's not that bad of a bet. But the home prices 10 years from now, I can almost assure you're going to be higher than where they are today. I'll kind of leave it at that. Let me know if you might think I'm okay. Give me a thumbs up. If you think I'm nuts, give me a thumbs down. There is no real, we don't know, folks. And I have no problem coming out every day and just saying, it could be a tweet. It could be a missile. It could be anything. I'm not going to say it's any other things, but it could be anything that really causes huge disruptions in all this. What I'm trying to get is just looking through this logically. If you're a homeowner right now, let me pivot over to what I do. Okay, so if you don't know who I am, folks, my name is Dan Frio. I come in each day and provide financial information basically on mortgages to clients all over the country. I'm licensed in all 50 states as well as Puerto Rico. I have a slogan, and it's one application, one credit pool. We're going to compare your loan to over 30 different lenders. What do we do is at my bank here, they provide me a license throughout the whole country in Puerto Rico. And they're also set up with 33 other lenders that we can offer you their rates and their programs. If they have programs like down payment assistance, they might even just have a better rate and fees than we have here at the bank or any other bank out there. We can use them. So if you want to get involved with that, you're a homeowner, check out the RateWatch tool I have right through here. You can actually put in your information and let me know what rate you want to refinance, or at least look at the numbers, and I'll reach out to you and let you know what it looks like, and we can move forward. If you want me to review any loan estimates you have, you can upload those right into there, and I'll compare it with the 30 lenders and send you a video back. But let's talk to some of those out there that are, you're a first-time home buyer. What do you think? Is it, if you can get the payment down in line, would you buy? I guess that's the question that I would love to know. So let's see what anybody else has to say about that. Going from a 30 to a 50-year will not you about 200 less monthly payments may allow some, I said the same thing. But here's Cedric. I'll say Cedric, Ridley. I apologize if I'm not getting it right. Here's what I said. I said, okay, the house price is going to go up, right? We just agreed. The taxes, they're going to be higher. You paid more for the house. The homeowner's insurance is going to be higher. You paid more for the house. So all those respectively are going to be higher as well. So the assumption of the $200 less, when I really whittled it down, it could be $100, because we don't even know what rate they're going to get. I think you said you were a loan officer. So, the difference between a 30-year is higher than a 20-year. 20 years higher than a 15. So if you went all the way out to a 50-year, what would the rate be? So that's the first thing I said. Well, what's this rate going to be, and how high is it going? If investors don't like to buy bonds out 30 years, sure as hell not going to want to buy a bond out 50 years. So these are the things that just because there's a tweet or whatever doesn't mean all this stuff's going to happen. Here, let's see what else you got, bud. People need to learn about amortizing schedule and be informed consumers. If you don't, you'll be trapped in. Exactly. And thank you. I could see you're doing your clients a service. And thank you for joining me today and learning some stuff. And I'd love to learn from you guys as well. So join us. Thanks for the thumbs up over there. Ridley, you might as well just call me and we can just hang out. Just me and you talking today. I ran the numbers. I believe I need to lock a 5.3 in order to receive a premium lender credit and take a 5.5 year. They're not going to have any clue what you're saying. So I get what you're saying, but yeah. So when you get to the 50-year term, what would it be based on? But the bottom line, folks, we're not going to get it. Okay. It would have to be an act of Congress to basically blow up that's a bad word. Rewind that. YouTube, don't take it. To exempt or nullify, but that's probably a better word, nullify the Dodd-Frank bill. because the Dodd-Frank bill in it, when the housing market crashed in 2010, came in and said the max term at even to this day is a 40-year term, and it can only be used for like bailouts and things like that. Now, there are private lenders that can do kind of anything they want to do. We are also set up with some of those. So if you need an investor loan, like what's called a DSCR loan or things like that, we do offer those. So reach out to me. I'd love to help in that case. See what else we got. Let's see. Preston, when I bought my first house, December 23, yeah, that was bad. 7.629. I was told by the realtor to date. Whoa, I lost you just a, and marry the house. I refinanced March of 25 to 699. Planning again in March. My balance remains the same over 3 years. Ouch. I get it. But look at it this way too. Especially the way the mortgages amortize. If you can ever afford to pay anything more than just the minimum balance, it's going to go directly to principal. If you can make an extra payment a year, you get your tax refund back. Instead of going to Disney World or Europe, apply it to the house. That makes considerable difference. You could probably cut 10 years off your term. So those are little pieces of the puzzle where a lot of people, I think Ridley just went up above it. People don't understand like the amortization schedules and things like that. There's tricks you can do. Like if call your mortgage servicer, see if you can get with a bi-monthly payment. So what will happen is every 2 weeks, they'll take out a payment or half a payment or however that works out. And what happens is you make an extra payment a year, even though it seems like you're making the same payment each month, it adds in one extra payment for the year. And it really, just work it in your budget. It's little things like that. Don't go to Starbucks, a couple times and apply $100 to your principal. Little pieces can go a long way. But yeah, I get what you're saying. But you're at 699. Get a hold of us. So here, let's get back to this. If you're a homeowner and you want to talk with us just to figure out, would a refinance make sense? Alan's on standby right now. We were going to do the 30 review lender thing, but I'm like, people need to know about this 50-year term because when I got companies calling me up, nationwide media, I'm like, okay, you guys need to know. I don't know how they're finding me, but thanks to you guys for watching. But reach out to us. This is basically what we do in the consultation. We're like, okay, where are you with this? And we just go through the numbers, and it's like, okay, here's your. I'm helping a friend of mine, and he's able to save over $600 a month per month on the refi. So his break-even point, I think, was like 3 months. So anything, next year, if and when the Fed or the president takes over the Federal Reserve and rates go down, which we don't know, you can refinance again. So you're at 699. Maybe look at the numbers, see if the numbers make sense to look at any lower numbers. But let's get to some more questions out there. What do we got? All right, modern day serfdom or feudalists, 50-year mortgage. Not sure where you're going there, my man. Okay, 50, the new 30. Nah, it's not gonna take place. I did kind of I ran the numbers and things. There's about a 30 to 40% chance of it ever passing through. And you got to remember, the Trump administration, they're in there for what, 3 more years. Would the next administration, go down this rabbit hole? I don't think. I think there's bigger fish to fry. But I just wanted to come on and just say, maybe the 50-year could get some people into housing. Now, I would highly suggest you not stay there, but the good news is, and if you're a realtor, homeowner, or whatever, you can validate it down below, the average mortgage is held for 7 years. 7 years. So if somebody got a mortgage for that term, a 50-year term, you're most likely going to refinance in 3, 4, 5 years anyway, especially if you see interest rates come down, and then do it at that point, do a 30-year term, or the shortest term you can possibly get and still afford it. So let's get to a few more questions out here that we might have. I'll be reaching out to you. Thank you so much. You're sure. YouTube. Yes. If you guys come in, you can check our rates. I hope we can't be beat, basically. So yeah, reach out to us. We'd love to help. And then Ridley, modern day debt slavery. Well, you can't really say it's slavery, and I don't want to go down that rabbit hole. You're not forced into buying a house. you're not forced into doing anything. And that's the great thing about this country. If you elect to buy this stuff, you know the terms. And that's sometimes the difficult thing as well. It might not be what we want, but sometimes we don't always get what we want. And so that's basically where we are right now. So let me do my final report for today, so I can kind of wrap this up in one thing, because we've been on here about 35 minutes. So let me go over my closing bell. If you guys do want to stay with me, actually, you can actually watch me prep for this thing. So what I want to do, the first thing I'm going to do is we're going to go over to mortgage rates, which you're seeing right through here. So those are down 5 ticks today. There was no financial news. There was really nothing on the calendar other than tomorrow. We were supposed to get the CPI and the consumer inflation numbers in the initial jobless report. That was going to fill in some voids. What rumors I'm hearing now is we will get some of the inflationary data and jobs numbers next week. So once that data comes in, it will be a roller coaster, because over the last 4 weeks, the market, everybody's been flying blind. And when the Federal Reserve came out last time and they cut specifically because of jobs. So the jobs reports, or the first jobs report that comes out, is going to be a game changer if the numbers come in a little bit different. So let's go over to the bond market and see how that is fair ticks, and that is what's causing rates to go down 0.05. So just so you guys know out there is no rate at really 6.29. All rates in most cases go in the increments of eighths. So this would be 6.25 or 6.375. I called this year, Q4 of this year, to be have a rate of 5.99 to 6.375. We're at that top end. We bumped it. We keep coming off of that, which is great news. I'm hoping to keep coming down off of that. But let's go back to the bond market, see how that's reacting. Any major news out there? No. The next thing I usually do is I'll go over to CNBC, and I want to look at all the financial data for today. But what I don't want to do is concern yourself with the smoke and mirrors. Okay, that's what they're wanting you to click. Focus on the stuff that really is concerning to you. If you're watching this, you're a homeowner, you're looking to buy. Again, I'd love to help you with that. Go to the rate update. But what in here, okay, the Dow Jones is up 400 points. Does that matter to you buying a house? It kind of does, because what's the market telling us? Then you want to go down through here and figure out why. When you see things like this, X through it, this is the smoke and mirrors I don't want you to see. Here's where I want you to stop. This is where I stopped earlier. And I'm like, whoa, this came out 2 hours ago. So as soon as I got this, I'm like, okay, you guys need to know about this, because mainstream media, they're hitting it, but nobody in the mortgage business is going to get this yet. So if you're a realtor, you're going to be like, okay, the Federal Reserve is going to be taken over by the Trump team next year. How do you know that? Well, here's what we got. We got Chairman Powell. He's done in May. We know he's getting replaced with somebody that Trump really loves. Now we had this guy, Bostic. He's retiring early, a year early, and he's going to get replaced. So now we're going to get more and more people voting in the direction of where President Trump wants us. So what's the most outcome of that? Well, it's lower rates. So then you go over, and the other piece of this is we need to focus in on tariffs. Okay, tariffs are a big role in this. So let's keep rolling down. So there's not too much in here. You're going to get all this AI stuff and everything else, but nothing else there really concerns us. You start looking at these things. Okay, but where were we? Boston. Okay, so that's what we're seeing on that front of it. So now the tariff news is the next piece of the puzzle that we really need to focus in on. Okay, why? Well, if it's deemed illegal, there's going to be some chaos. Now, is it going to be detrimental? No. The Trump team already has plan B and C and D already figured out. Okay, so that's that. But it's going to be a hiccup. So it'll be a short-term hiccup. So don't be surprised if 1 or 2, 3 days you get a huge move one way or another because of some of these hiccups that occur. What we try to do here, and that's why we created the RateWatch 2.0 tool, if you go to my website right through here, is we created this because so many people miss this. Okay, so they're watching my videos each day, or you're a consumer, you don't really pay attention. Who's all excited about mortgages? And then you find out, oh, mortgage rates just hit a 4-month low. So then you start looking at it and say, oh, they went down quite a bit. I'm going to wait just a little bit longer, and then a little bit longer. And then what happens? You miss it, and it went all the way back to 7. Now people are doing the same thing. I got people, it's like, okay, I can get you 6. They're like, no, I need 5.875. And I'm like, the difference is $8. So educate yourself. That's the main purpose of this. But if you really don't want to mess with this, put your information right here. RateWatch 2.0. What's going to happen is, let's say you're at 7%. Put in, you want me to call you at 6. We'll go over the numbers, see what they look like. If you're looking to buy, the best thing I would give you is advice, schedule a consultation. You're going to talk to me or Alan. We're going to go over what's your budget. What's it look like? Can you really afford what you want? I'm not going to try to upsell you. I want you to buy what you can afford. Is it in the budget? Does it work? Do you have enough money to do what you want to do? Is your credit scores there? What programs do you fit best in? The biggest thing is exactly there. Which is the best program for you? And a lot of loan officers will put you into this program or that program. What we're going to do is say, okay, you're approved for ABC. Which one you want? I would suggest we go with B, and here's why, but you're the boss. You tell me what you want to do. I'll explain to you guys what I would suggest. Would I take a 50-year mortgage? Would I take a 30-year mortgage? When would I refinance? These are all the things that we can help you with. So let's go down through here and answer a few more out there. Ridley, you're forced to pay rent to the government in the form of property taxes. I get it. Okay. And the next one out here is Bostic leaving is a good thing. It depends on what side of the aisle you sit. I'm trying to sit in the middle to say, here's what's going to happen. Do I want this to happen or that to happen or this to happen? I don't know. What's going to happen most likely? My kids always tell me, Dad, why you always go in that direction? I'm like, that's the most likely outcome. Even though you might not want it, that's the most likely outcome, and that's what we're going to prepare for. So that's what we're seeing in the stock market today. You go to the bond market. We already went over that. Let's see what else we got. There is really, let's see what the earnings reports look like for today. But when you go over to the bond market, it's looking pretty good. Any data that we got here, mortgage finances, mortgage applications are skyrocketing. I'll be blunt with you. Any consumers out there, just to give you the breadth of the business right now, or the hotness or not, we've probably doubled our business over the last 30 days. More and more people are coming back to buying. I was surprised. This time of year, you kind of right before you get to Thanksgiving, it usually starts to really peter out. We're getting a bunch of contracts in, and people are finally starting to realize maybe rates aren't going to go to 4. So we have a lot more people reaching out to us and say, okay, can we kick these numbers around to see what's what? If you look down through here, I don't think you can see it. The 10-year Treasury. This is a thing I want you guys to monitor if you don't have access to the MBSs, which is a mortgage bond. I'll explain these bonds to you here in a second. If you're here following me, I want you to understand all these pieces of the puzzle. Okay, so if you don't have access to my channel, or you're just trying to figure out, okay, generally what's going to go on with mortgage rates, I need you to follow the 10-year Treasury. Just follow it. If it's going up, mortgage rates are going up. If it's going down, rates are going down. This is this right here. We want this at some point to close below 4 and stay there for a while. That is a kind of here you can see it right through here. Let's see. It seems like we just can't stay there. We'll bump it, go up, bump it, go up. We thought we were there, then it went back up. Once we can stay down there and close below there for a while, the markets get used to it. I think we're going to see more and more money piling into the long end of the Treasury yields, and that's going to help the bond market overall, and that's going to help right through here. Now, if you're new to this channel, we follow this chart right through here. This is a mortgage bond. The only thing you have to understand about this is, see up through here, you don't see a rate, you see a number. This is the price of the bond. So this one's kind of flip-flop. And here's what I mean. If this number, the price of the bond's going up, that means rates are coming down. Let me explain it to you. I haven't done this in a while. Let me give you an extreme how the bond market works, just so you understand it, even if you're looking to invest in bonds at some point. Okay? So when the price goes up, rates come down. Let me show you. So let's say, for example, this bond, this mortgage bond, it's worth $100. Okay, so I'm going to purchase it from you sometime before. Okay, so let's say I paid you $50 for it, and at maturity I get $100. Okay, so I give you $50. You give me my mortgage bond. I hold it till maturity. When it matures, I give it to you and get my $100. So I paid you 50. I got 100. I doubled my money. My yield was 100%. Okay, so now let's drive the price up like this bump here. Drive it up. Okay, I'm going to make it simple. I'm going to pay you $100. Okay, so I paid you $100 back in 2023. You give me my bond, and now I give it back to you, and you give me $100 back. So I paid you 100, and I got 100 back. What's my yield? Nothing. Zero. That's what I mean. Prices go up, yields come down. Okay, so that's how it works. That's the easiest way I can do that. Go over to any economic news there, nothing there. And then I went over a credit card scenario with you there. This was crazy. So if you guys are, let me talk to anybody that's homeowner out there. If you're looking to refinance, you might even have equity in your house. Here's what I was dumbfounded recently is I was working on a loan for a young lady, and she had one of those payday loans. You want to talk about getting robbed. I think it was like the yield was like 85%. Honestly, I didn't even think it was legal. It was something absurd. And I was like, you got to be kidding me. I get why, if somebody goes to one of those loans, you're never going to be out of debt. Some of these things, like buying a house, like you were just saying, don't buy a house. You're not forced to buy this stuff. So, just take that for what it's worth as well. So any other questions out there? Ridley, it's me and you, buddy, but let's see what else you got to say to finalize this thing. Everyone wants to finance in or add the cost to my outstanding principal balance. Okie dokie. Got it. Okay. So, folks, that is it for today. Mortgage rates, the mortgage bond market had a pretty good day today. I think the shutdown is giving some exuberance out there. If we go to the overall markets, let's see if we have a Cinderella story to end the day. Go through here. And what I call a Cinderella story is, it's not this, but it's pretty darn close. Cinderella story to me is when you have all these indices across here. The Dow Jones, the S&P, the NASDAQ, and the Russell all up. And most investors, they buy stocks hoping they go up. I don't know if you know, but you can make money in stocks by what they call shorting them. You can actually make money when the price drops. Check it out. If I'm not keen on that, but sometimes it works. I'm not telling you what to do, advising you what to do. I'm not a financial planner. Please don't use any of this information to trade, and it's for entertainment and educational purposes. Okay, the VIX is up a little bit. This is basically the anxiety level on Wall Street. Anything at 17, nothing to really write home about. Crypto's probably down. It's all over the map. Then we got oil. Oil's $58 a barrel. So I watched, I think it was Chevron's earnings this morning. There was a call from a major oil company. And here's, in the past, we were always taught or even explained to within a few years ago, I actually invested in some oil wells, is you need oil at $60 a barrel or more to really have major profits in oil. And well, I won't say they're all printing money, but to really start building more and more and more and more. And just today with the earnings report that I watched, they came in and said, we're okay at like $50 a barrel. So the production has most likely is more efficient, driving that cost down. So even at $58 a barrel, my concern is oil gets too cheap, production just halts, and then we have a big jump, and then it's the huge volatility, rather than just kind of flow it through the system. So I think this is great news for everybody. The companies are making money, and this is going to help inflation huge. And maybe it will just offset the inflation we got from tariffs, bringing things a little bit more in line. And then once we start getting more and more housing data, I think that data is going to bring inflation in check probably within the next 6 to 8 months, unless there's other hiccups somewhere else. So, folks, that is going to be my report for today. So I just want to explain to you guys, again, it's all about interest. Interest sucks. I know it, but sometimes you have to pay it. But would I be a proponent of a 50-year term or not? I don't know. Let me know your comments down below. And if I can help you in any way, looking to buy, refinance, even just talk about, does it make sense to do any of the above? Reach out to us, folks. We'd love to help in any way we can. My name is Dan Frio. I'm licensed in all 50 states as well as Puerto Rico, and I've been doing this for over 35 years, folks, and I'd love to win your business. So that's it for today, folks. I will be back tomorrow at the opening bell to let